Gonna keep it quick. Again, a lot of turmoil changes around the house here. I've also got a call at 7:45 my time, so I've got to keep this kind of on point and quick. What we're going to do today is just run through the market. We're going to have a quick look at key levels on the E-minis, crude, gold. We'll have a look at what's happening in the foreign exchange market, which currencies are moving, and then we'll go over and have a quick look at the crypto over here. Just have a look at Bitcoin and Ethereum, kind of the two biggies in crypto. Also, I want to talk to you a little bit about a trading method. So we've talked about bounce trades, how those work. We've talked in the past about breakout trades, and then I mentioned there's a combination of a trading method that you can use, a combination of those two. Again, there isn't any one that's better than the other. There is no long and short of the game here is there's nothing that's any quote better than anything else. When you're looking at indicators, you're looking at historical performance, you're just simply looking at what's happened in the past, and you're making taking a trade or taking an action based on that pattern of data that you've seen. So all that any trading style, trading method does is kind of put some order around how you view and utilize that past data. So there's no, magic bullet, golden egg, whatever it might be. There isn't one of those. It all comes down, unless it's process. Process is the golden egg, right? Process, following the process. If you've got a process and you stick to it, and you've got some mathematical advantage that comes with that process, and that comes through money management and trade management, you're going to be fine. When you get outside of that, you jump from method to method, you jump from process to process, you don't practice good money management, you don't practice good risk management. That's when the cards all come crumbling down. So I'm just talking about some basic methods that you can utilize, and if you utilize those and utilize them consistently the same way with the good math behind it, you give yourself a competitive edge that will work out for you in the long term. And that's what you're looking for, right? It just comes down to actually executing it that becomes the difficult part. That's where the mindset comes in. And we'll talk about that in some future lessons as well. So anyway, I mentioned I'm kind of trying to do this quickly today, so I shouldn't go off on a tangent for too long. Let me pull up the screens over here, and then we'll run from there. So let's begin over here with the futures market, looking at what's going on over here in E-minis. So had a bit of a rally over the course of Monday, and now in off trading hours this morning, we've been pushing up. As a matter of fact, on the 30-minute time frame, we actually just crossed over into territory indicating that we're in a buying bias on the 30-minute. Now, that is still different from the 4-hour. And when we look at the 4-hour, we're still very much in a downward trend. So I've talked about this a little bit before in the past as well. Depending on what your trading strategy is and how you want to look at the market, some people will say, hey, when things are mixed like that, I don't want to trade. If I've got my 4-hour bias, which is down, and my shorter term bias is up, that might be something that says, hey, I don't want to trade until they're both in agreement. That's okay. It means a lot of people get caught up going, well, that means I'm going to miss out on a bunch of points or a bunch of pips, or, depending on what market you're looking at, right? The flip side of that is it's a mixed market and anything can really happen. So don't get too caught up in worrying about what you're missing out on. Focus on your trading method. So 30-minute is different from a 4-hour from a bias standpoint here. Do with that what you will. But on the 30-minute, the bias is longer today. Now we're coming up to a key level. This has been 2400. It's been a level that's been on our charts here for a little while. So that's an interesting key level for us up here to see, if we do reach that, that might be a point to look at short again based on that bounce method. As far as other things, right through here, 2275, we'd seen price kind of closed there on previous Friday, came to it yesterday a couple of times and repelled off of it, and then finally now that it's broken above, it's seeing that as support. So 2275, if we pull back here, looking at that current intraday bias might be an opportunity for us. Of course, we really need to wait until regular trading hours come on before we make any real decisions there, because obviously the volume increases when we have the full U.S. session actually underway and we have regular trading hours underway. Off hours trading is very light from a volume perspective. But we'll see what happens around this. Over on crude, we've pulled back off of that 22 area. We're up here around 24 right now. We're seeing that as it was previously resistance for us, as being supported now. We've just broken below it. The 30-minute bias is different from the 4-hour bias on crude as well. I think we'd still be looking to go shorter. Both of these, I think, have a lot of opportunity to go shorter. Kind of in my mind, I think things are going to get a lot worse before they get better. No matter how much the government throws at it, there's still a lot of chaos continuing to come. We've got more and more cities being locked down and having mandatory quarantines, which is not going to do a whole lot for the economy. So I think some of these things are going to get worse before they get better. But do with it what you will. 30-minute bias is up on this as well, but it is counter to the 4-hour. Here on gold, we're on the 4-hour. We're just coming up, looking like we might cross back over to be a buying bias. On the 30-minute, we're definitely in a I don't know why that's not updating. There it goes. In a buying bias on gold as well. Before I move screens, let's just talk about this real quickly. I mentioned that there's a trading method that can be utilized. It's kind of a combination of the of the breakout and of the bounce. And the way that works, it's a pretty neat trading strategy. Different people teach it. You'll find it out there on the internet. I don't know if they have any specific name for it. I'm sure somebody came up with some creative name that they want to call it. It's just simply another way of looking at the market and finding some level of consistency with how you look at the historical data and how you trade off of that historical data. The money management behind it is what gives you the edge. So again, it's not a silver bullet or whatever they call it, magic bullet, or a golden egg that's gonna you're just gonna click a few buttons and suddenly become a millionaire. It's a trading method though that when you apply it consistently and use good money management, risk management behind it, it can give you a competitive edge. You're not going to win every trade, just like you're not going to win every trade with any other trading method that's out there. So I just want to reiterate a lot of these things before I go into it. But the long and short of it is this. What you would do is you're going to look at what the bias is on one time frame. So if you're going to trade on a 30-minute time frame, you might look at the bias on a 4-hour. If you're going to trade on a 5-minute, maybe you look at the bias on a 30-minute. So let's say we're looking at the bias here on a 30-minute on gold. The 30-minute is up. So wow, what just happened here? Nothing. That was crazy. My E-minis chart just freaked out on me. It looked like there was a big gap, but there wasn't. Sorry, it caught my eye when it did that, and I went off on a tangent. So anyway, what we would do to use this combination strategy, and what it is looking for breakouts in a combination with a pullback, right? So it's that combo where we're utilizing a breakout strategy of posting, make my finger up here, of if we're trading in this area, we're going to wait for it to break below a certain area or break above a certain area that's in the same direction as whatever our trading bias might be. But we're going to do it in combination with a pullback. So if we're in a downward trend and we pull back up, we're going to be looking for opportunities to continue to sell. If we're in an upward trend and we pull down, we're going to be looking for opportunities to buy. So this is a trading method that gives you a combination of those two strategies. So let's pop back into it. So if we're looking at gold, let's say, let me just make this a little bit bigger, and we're in an upward bias on the 30-minute, right? So our trend, our intraday trend is up. So we're in a 30-minute, but we're going to trade on a 5-minute. So we're in an upward trend in the 30-minute. We're going to go over to our 5-minute, and what we're going to look for is times that we're pulling back. And when we begin pulling back like this off of this upward trend, we start to pull back. And you'd want to do this during regular trading hours, by the way. I mean, off trading hours, you get much smaller movements and may not be as lucrative. There's sometimes in the off trading hours a lot more, what we might call chop. You don't really get as nice trends like you might get during other parts of the day. But what we would do is, if we're in an upward trend on the 30-minute, we'd be looking for times on our 5-minute where we begin pulling back. So like right now we're pulling back. So what we would do is we would set a buy order at the top of the previous candle. So we're pulling down, we're pulling down, we're pulling down. We'd look for a buy. So if this pulls back and breaks above 1665, we'd look to take it long off of that, and we'd set our stop loss down here below that previous candle. So right now on this candle that's currently popping around, we'd be looking to buy here and take a stop down here if it breaks below. Now obviously for lot sizing, you'd have to consider your position size based on whatever that distance is from your entry to your potential exit for risk. As far as trailing, you would simply trail the stop, either off of you can do two things. You can either just have a fixed stop loss, which would be down here at 1665 area, and a take profit that's 1.5 or 2 times what your entry is, or you can not have a take profit and just trail your stop, trail your stop based on the back of those previous candles. So like using that yesterday, for example, here during regular trading hours over here, where are we? 5-minute. Looking back yesterday, for example, over here during regular trading hours, say it's the 23rd. Yeah. Sorry, I'm on a 5-minute, so it's taking me. Here we go. So during regular trading hours yesterday, coming in, we were in an upward trend, and we're looking at this begins pulling back. So we would look to buy. So you set a buy order here at the top of this candle with your stop loss here. Doesn't fill it. So then you trail down. Next, so this candle closes. So then you put the buy here, stop loss here. Doesn't fill it. So then this candle closes. And now you put the buy here, stop loss here. It breaks through, and then you can start trailing on the back of those, or you could just use a fixed stop loss and a fixed take profit that's 1.5 or 2 times what that initial risk would be. So it's a really interesting trading method, and it's that combination of breakout, because you're looking for a break out of a area that's being established, and it's also taking advantage of that pullback, right? So if we're trading in an upward trend, we're waiting for price to pull back instead of waiting for it to come to a specific level. Whenever it begins pulling back, you just start your entry point, stop loss, and you're only looking for it to go in the direction of that trend that's identified on that higher time frame. So it's a really cool trading method, really cool way to trade. Again, you're not going to win every trade. You're certainly not going to win every trade, but it's a cool opportunity to do a combination of 2 types of trading methods, and it's a little bit more active depending on the time frames that you're trading. Obviously, you can slow it down if you look at your 4-hour trend and then trade in that direction on pullbacks on the 30-minute. Let's say you're going to have wider stop losses, wider positions of when you're entering to what your stop loss would be. So you've really got to adjust your lot size to consider that. But it comes out as long as you're taking that risk that's 1.5, 2 or more times than your initial entry. Over the long term, it gives you that mathematical advantage that will help you be successful. Of course, I just have to reiterate, like anything else, there are going to be losses. You're going to have trades where it touches you in, takes you out, and then moves. That's going to happen all of those things are still going to occur. It doesn't change how the market works. The market still works how the market works. It just comes down to giving you a consistent way to do it. So if just trading a breakout isn't for you, or trading a bounce isn't for you, this is another opportunity to combine the two into something that might give you that trading plan that your mindset can get behind and your personality can get behind to give you that best opportunity for consistency in the marketplace. So anyway, that is it for that. Let's have a quick look at what's happening in the foreign exchange market right here, and then see what's moving. Pound has been a big mover over the course of the day so far. Pound moving to strength. Weakest currencies are the Aussie and the New Zealand. I don't really see opportunities on those, considering that we've already moved, in some of these cases, 400 pips. So the pound versus the Oz has moved 400 pips on the day. Average, in the 30-day range is 331. Average on the 15 is about 480. Not a lot of opportunity, I don't think, for that to continue on, unless there's some sort of a reversal. Pound versus the CAD might be opportunity, although that's moved 387 on an average of 15-day range, 345, so really not much there either. Not really seeing a whole lot. CAD yen. So we've got the yen and the CAD that have been kind of together. Yen is just starting to push above the midpoint. CAD seems to be trending down since this new session has begun. So that might be some opportunity for us. The CAD yen has only moved 76 pips today. Average for it is anywhere from 121 to 146. So that certainly would be opportunity for us. If we look at the CAD versus the yen on a chart, we can see a couple of things. It's been in a downward trend and kind of hit some chop over the last few days. So that might be opportunity for that CAD to continue going short against the yen. So definitely from a range perspective, it fits what we'd want to see there. So I think I'll look at a breakout on the CAD versus the yen, starting with just looking short, taking that CAD short against the yen based on what we're seeing here, and then also looking at what we're seeing on our average range. Changing gears again over here to crypto. It's still looking like we're in a downward trend. Things have flattened out a bit over the last few days in both Ethereum and in Bitcoin. Bitcoin's actually started to push up just a little bit here, although we are hitting tops. If we look at Ethereum, we've been seeing this top right here held around 145. It's been hitting it and repelling. We'll see what it does today. We are still in a downward trend, so until these cross over on the 4-hour, the bias is still down. We'll see what it does. Right now, we're coming to a kind of a key area that had been previously had been resistance. It broke it, and now it would be our support area right here at 135. So do with it what you will. Trend is down. If we broke below it, we'd look to continue short on it. Although you could also look to play a bounce off of that on a counter trend trade. It just really depends on what your trading plan is. Same for Bitcoin. Bitcoin has leveled out a bit and actually started to push up just a bit. Although we do still have this top up here, which is where we're trading at right now, around 6,700. So that could certainly be a resistance point for us to look to go short, which would be with the trend. Until this crosses over, we would still be in that short trend. So 6,700 might be the area to trade short off of. Of course, again, we've also got this level here now at 63, 6250, 6300. If it did pull down to that, you might look at a counter trend trade long, but the trend is still down, so we'd be looking to find short opportunities over here on Bitcoin or Ethereum. Just checking out what the Crystal's doing, slowly pulling back some of the losses it took over the course of the last couple of weeks. So nice to see that continuing on and continuing to work. I was a little disappointed in the drawdown that it took when the bottom fell out of things. It certainly seems like it was a little higher than it had been when it was previously managing trades in that drawdown period. But of course, I knew that going into it, and I mentioned that it had been, the performance that it had was in an upward market. So this is the first time it had really been tested with that big fallout. So we'll see where it continues. It drew me down right around 50%. So we're slowly bringing those back, and if we get a good push in either of our really in any crypto instrument, we should see that come back pretty quickly. So that's it for me for now. I'm under the wire. I've got to get on the call now at 7:45 my time, 8:45 Eastern. So I'm going to let you guys go. If you have any questions about that trading method, we're going to talk some more about it tomorrow and just talk about how it works a little more in depth. But I think that's a good overview that we hit today, looking at gold on how that can work for that combination of breakout versus the combination of breakout versus bounce strategy. So anyway, that is it. I'll see you guys tomorrow. Have a great day. Bye.